our education program, our marketing strategies, and our lender network focus across the gamut of commercial lending. In other words, we do business loans, and our lender network and our trainings all match up for the provision of that type of financing. So let's jump into some of the main categories. First off, we do a whole lot of real estate financing, and that has many different loan products within it. So that might be mortgages. So term loans, your permanent financing. Often your bankable clients would be the ones receiving those, and they would often have the lowest interest rates along the way. So we have our mortgages and our permanent real estate financing. We also have hard money or bridge loans or gap financing. Also within the commercial real estate space, although we have lenders who will go ahead and collateralize those loans based on some other real property, hard assets such as equipment and the such. That said, most gap financing, bridge loans, hard money is going to be in the real estate space. That's going to be your short-term loans, 1, 2, 3 years, and typically interest only and based on the loan to value rather than the credit history of that particular borrower. So we've got our mortgage loans, we've got our hard money or bridge loans, and we've got our construction loans. And in this category, you can have ground up construction. So you're digging down and building up and the whole process. You also might have simple renovation loans. So you're not doing a ground up build, but you are doubling, tripling the size of that property or just doing some fix and flip work. So you're going to improve the property, do some slight renovations, and then resell it. So we also have those fix and flip products along the way as well. So really the whole gamut of real estate as well as raw land acquisition, we train on and include in our lender network. And within each of these categories, as we're thinking through them, we have multiple lenders. So it's not as though there is one lender who does hard money. There's not one lender who does mortgages. There are many lenders in each of these different categories because you're going to work with a variety of different clients. Some clients are going to want a very small, relatively speaking, amount of money, and some are going to want much larger. And the lender who specializes in the $500,000 to $1.5 million space is going to most likely be a different lender than the one who is comfortable working $25 million to $50 million. Right? So the different amount for your loan sizes, the different credit profiles for your clients, these are all going to point to different lenders. So we need many different lenders within each category in the network in order to be able to serve each of your clients where they are right now today. So that's why we include many different lenders within each type or class of lender. So moving on, we talked a bit about real estate, and there's some other hybrid models that have raw land acquisition, the construction, and guaranteed perm takeout at the end, combined in some that are technically real estate lines of credit, more for fix and flip investors. So there's a bunch of other smaller ones, but that gets the main most common categories, right? So then let's move on to equipment financing. In equipment, we do a lot of loans. So your standard just equipment loan. And we also do leasing. So that's when you're not necessarily going to own that equipment, but you're going to lease it and have full access to it. And we also have the hybrid of the two. So it would look like a sale leaseback where they're actually selling that back to the lender and then leasing it from them. So they can still maintain the equipment. It often stays on premises during the entire process. They just transfer ownership and they have a lease agreement rolled in so that they can free up the equity within that equipment right now, get it leveraged and utilized today, and at the same time, still maintain full access to that equipment to continue delivering for their clients. So we have all of this within the equipment space. That works across many, many different industries as well. So everything from trucking to manufacturing over to marine, over to medical and tech, and the whole gamut of different industries that are going to be leveraging equipment. We also do a whole lot within the SBA space. So that's going to be your SBA 7As, which are very versatile and can be used for real estate to inventory to business acquisition and a whole lot of other uses, equipment, so on and so forth. As well as 504s, which are more limited and focused on larger loan amounts. and have a more limited usage along the way. But depending on what your client needs, one or the other is there. And we have lots of lenders that work across in each of those different spaces. So moving on, we also do a ton of working capital. I'm just going to use that as a catch-all category for many, many different types of financing that are not tied back to a particular asset class. In other words, equipment financing related to the asset of equipment, real estate financing related to the asset of real estate, and then SBA related to particular government programs where they are backing or guaranteeing that financing. And then you have working capital, which is not required for a particular usage. In other words, this might be a loan that you use to cover payroll. It might be a loan that you're using to open up a new location for your business, or many, many other purposes, right? But I'm going to lump them together just for thinking of big categories as working capital. And that could be just a straight up business loan. That could be a term loan that is 1 year, term loan that's 10 years, but it's a business loan, all purpose usage of capital. You also could have in that particular space lines of credit. So we do secured lines, we do unsecured lines, depending on the credit box in which that borrower or client fits into. But the key takeaway there is that there's lots of different line of credit products. And then you have other products such as factoring, which sort of are financing or selling your receivables or your invoices, but also work largely as a line that you can utilize more or less of on a month-to-month basis. So you've got your factoring, you've got your purchase order, PO financing, you've got your contract financing. So essentially, when you have a demand from a client, you need some cash right now today in order to deliver profitably on that demand, and financing that is collateralized by that demand, or based on, I guess would be a better way to say it, based on that particular demand. So there's a whole variety of working capital. Then we also have an immense collection of specialized lending. So that might be, I don't know, nonprofit lending, for example, or franchise financing, or church financing. And the list there goes on and on. If we were to divide it out into literally every single different type of financing you could possibly think of that a lender would say yes to, cannabis or whatever, we could have a list of hundreds and hundreds of different loan vehicles. But thinking in broad brush strokes, easy categorizations, a big box to put that in, let's just put that all in specialty financing, where there's lenders that do just electric grid development or just mining operations. They focus on maybe lenders that focus on just oil and gas refining and drilling. So, each of those I would put into a specialty category. So the key takeaway, if you're thinking about the lending network as well as the training, is that we do everything that is commercial or business financing vehicle, but we do not do consumer or retail lending. In other words, if it's going to be a personal use loan, so that's financing your personal residence, your personal car or automobile that you're using to drive around for you and your family, those we do not specialize in the training, the education of. We do have lenders that do those, but our focus is really everything business, everything commercial, because that is the area of immense profitability and much, much lower competition along the way.